Members of the Board of Trustees, Subcommittee on Investments, please respond present when you hear your name. Chairperson Thompson.
Present.
Trustee Ferrer.
He'll be joining us in a minute.
Yep, in a minute. Trustee Wilkins.
Present.
Trustee Kim.
Present.
Professor Versani.
Present.
Professor Benton.
Present.
Kennedy.
And by the way, we've been joined by Trustee Ferrer.
Great. And Tavon Pierce.
Present.
Great. So you have a quorum. I'll now take a roll call attendance for members of the Chancellery and invited guests. Please respond present when you hear your name. Chancellor Matos Rodriguez.
Present.
General Counsel and Senior Vice Chancellor for Legal Affairs, Derek Davis.
Present.
Executive Vice Chancellor and Chief Operating Officer, Hector Batista. Okay, Senior Vice Chancellor and Chief Financial Officer, Matt Sapienza.
Present.
See you, Matt. Christina Chiappa, Deputy Chief Financial Officer. Present. The Executive Treasurer, Thomas Zhao.
Present.
And Dean Mary Pearl, the COPS Liaison.
Present.
Great. And we're also joined today by several guests from Makita Investments, Gianni Jones, Senior Vice President. Great. Judy Chambers, Managing Principal. Did we lose Judy?
I don't think Judy's on this call.
Okay. And Sam Nunes, Senior Associate Investment Analyst.
Present.
Great. That's it, Bill.
Okay, thanks, Gail. We're going to take up the following items for approval. And the action items. Action item 1A is the approval of the minutes of the April 27th, 2020, October 5th, 2020, and January 11th, 2021 meetings. I move the approval of action item 1A. Do I have a second?
Ferrer seconds.
Any discussion on the item? Okay, we'll now vote. Please only respond if you'd like to abstain or oppose. That item is approved. I'd like to now address the policy calendar. Policy item 1B1 is a resolution to authorize the fiscal year 2022 CUNY investment portfolio spending rate. This is an annual activity that's performed each spring and is required to be in compliance with the New York Prudent Management of Institutional Funds Act. The university is required to analyze the investment portfolio to determine the appropriate spending rate for the upcoming fiscal year. For fiscal year 2022, the university is proposing a 4% spending rate. Let me ask Senior Vice Chancellor and Chief Financial Officer Matthew Sapienza to introduce the topic before handing it over to Thomas Zhao, University Executive Treasurer, for a brief presentation.
Thanks so much, Mr. Chairman, and good evening, everyone. I'm going to turn it over to Tom, as the chairman said, for a brief presentation on this topic. It is an annual activity that we do every spring to determine the spending rate. And I just want to say, in summary, last year when we came to this committee at this time, we were in the right in the middle of the fire of COVID, and we were all very nervous about what the future held. And so we recommended a decrease in the spending rate last year. Because things have stabilized and the market's been doing well, we're recommending to go back up to 4% this year. And Tom will take us through some more of the details. So with
what was the adopted spending rate for last year as a point of reference?
It was 3.75.
Thank you.
Hi, Gail, could you make me a co-host so I can share? Thank you, everybody. Again, as Matt mentioned, this is an annual, request to the board as part of NMIFA. This deliberation is in accordance with the New York Prudent Management of Institutional Funds Act and the agenda, right? CUNY has many funds in the CUNY investment pool. NMIFA allows us to group similar situated fund categories. Otherwise, we'll be here for a very long time. So the The next thing on the agenda is we're going to look at the 8 prudence factor. And lastly, we're going to deliberate on the prudent spending. I'm going to keep my comments short, but essentially the 8 prudence factor, we have gone over, certainly most of it last year as well. The long-term pool is a pool that is supposed to last us for very long, indefinite, so we do definitely want to keep that in mind. It is an indefinite perpetual fund. The purpose of the fund obviously is to make sure that there's funds available for the colleges in times like this. This past year has been an extraordinary year by any measures. It was a year of global pandemic and a global recession as well. So it was a year when those among us with less were disproportionately hurt by joblessness and poverty. And this is where the CUNY investment pool and in general endowments help. Endowments during this time is able to, especially with the CUNY pool, because it is diversified as well as hedging against decreases, we're able to provide support at the time where colleges and students needs it. The general economic condition. At the macro level, the overall economy, as many of you seen, is improving. National economic activity accelerated to a moderate pace in the first quarter of 2021, and outlooks were generally more optimistic, boosted in part by acceleration in the COVID-19 vaccines. But on the flip side, we are seeing inflation starting to eke up. If many of you have gone to Home Depot or any other store, we're seeing commodities, the first thing going up. So definitely inflation is starting to pick up. Price is accelerating slightly at a moderate price increase. Input costs across the board, especially metal, lumber, food, and fuel prices, is mainly attributed to the supply chain disruption as well as the winter. So definitely we need to look at these 8 prudence and balance when we set the spending. I'll just pause if there were any questions, otherwise I'll continue. Any spending decision is really a balance. Last year we showed you a balance beam, but it's really, the decision between spending now or saving so that we can have a perpetual fund to be able to for future generations, right? So on the spend side, if we spend too much, we wish that we don't have enough to really be able to last us for the time frame, that duration that the pool was meant to go. The average pool spending, we're very careful about how much we spend relative to what our outsourced CIO has told us in terms of how much they're going to be able to earn in the long term. So if we spend too much, we're going to not be able to adjust as much, because once you spend it, it's hard to adjust down once you kind of open up the floodgate. So on the other side of the equation, we want to make sure that based on economic conditions, we continue to be prudent and save a certain amount. And in case, right now the returns, as Makita mentioned to you, are great, but things could change in as they say in the New York minute, right? Things could change. So we want to be prepared for that. And if we have a lower rate, we can always reverse it and give folks and colleges the ability to spend more later. So that's certainly an argument made for saving. So as we look at both of these elements, to spend or to save, last year the spending rate was 3.75, as Matt mentioned, and this year we're recommending to increase it based on factors that we will show you in the next screen. So we start with last year's spending rate, 3.75. We're seeing a much stronger year-to-date return for fiscal year 21, but also we're seeing a greater need for scholarship and fellowship. CUNY students are typically the ones that were disproportionately impacted. And we're also seeing signs of inflationary pressures in the market, but overall market conditions continue to be favorable. However, the pandemic is still a significant risk for the market. So we're recommending a prudent spending rate for fiscal year 2022 at 4%. In also reaching that conclusion, we also looked at what our peers were doing. There's a 2020 NACUMBO endowment study. Overall, endowment spending has gone up over the last year or two. And 70% of institutions in the NACUMBO endowment study indicate that spending went up. The average endowment spending for 22 was 4.59. It was up from 4.36. So we are seeing, colleges and universities spending more, and we also seeing that at CUNY as well. We have it in the appendix if you're interested, how the CUNY spending over the last 2 years has also gone up as well. So this trend is, the CUNY trend is also a national trend as well. So the appendix are for your review. Again, what we saw in NACUMBO, we're also seeing in CUNY as well. In 2020, when the pandemic hit, we saw increasing spending. And even this year to date, we still got one more quarter left to go. And we saw on average, pre-pandemic, it was about 2.4. Post-pandemic, we're looking at about 2.8 to 3% of actual spending for endowments. And you'll see here the fiscal year 2020 spending by purpose. Disproportionately, the spending has gone to scholarships to our students. And that's, we saw before and after the pandemic, but definitely it's disproportionate at 56% towards scholarship and fellowship. That concludes my brief presentation. Are there any questions?
A quick one. We seem to set a level that's slightly higher than the actual level that that is actually spent. Am I seeing this right? Is there something? Does that seem usual to you?
So it's disproportionate. The thing is that, remember, one of the things is the CUNY investment pool has a lot of funds in it, and also many colleges participating in the CUNY pool. Some colleges are already at the cap last year, 3.75. Others may be spending less. So on average, we're seeing that we have a 1% buffer. But the challenge is when you go down to the college level, there are a number of colleges that are at the 3.75 that could benefit from going to 4. So.
Other questions? Any other questions? Okay. So let me do this. Let me move approval of policy item 2A. Do I have a second?
Pereira seconds.
Any discussion on the item or further discussion? Okay, we'll now vote. Please only respond if you'd like to abstain or oppose. All right, that item's approved. Policy item, I guess, 1B2 is a resolution to authorize the extension of temporary asset class range adjustments. The board approved a new long-term asset allocation in March of 2018, which included an allocation to the private equity market, which by its nature takes a longer period of time to invest in. In April of 2020, the board approved a 1-year temporary increase in the acceptable ranges that the university's outsourced chief investment officer, Makita Fiduciary Management, must stay within in order to be in compliance with the university's investment policy. While additional investments in the private equity markets have been made over the past year, the university is waiting on private equity commitments to transition to capital calls. The university would therefore like to request that the Board of Trustees approve a 12-month extension of the increase in target ranges related to the certain asset classes ending April 30th, 2022. In addition, the original target ranges for each asset class as adopted in the approved investment policy will take effect May 1st, 2022. Senior Vice Chancellor and Chief Financial Officer Matt Sapienza will provide further background on this item.
Thank you, Mr. Chairman. And as our outsourced Chief Investment Officer, firm Makita, discussed this topic a little bit in our discussion in executive session, we have had good pacing in terms of trying to get to our allocated levels that were approved when Makita first came on board back in March 2018, as the chairman said. We last year asked for a temporary 12-month extension as we worked our way, especially to the private equity allocated numbers. We've gotten to the floor, but as the chairman said in his description of this item, we're awaiting on some capital calls in order for our numbers to get into the ranges of what's been approved by this committee. So we're requesting another 12-month extension with the expectation that those calls will happen. And that will be in the range at the end of this 12 months, in the long-term range that was approved by the board back in 2018.
Anybody have any questions for Matt? Any questions on this topic? Okay. Well, now I guess well, I've moved in, I guess. Okay, let me move this item then. Do I have a second for this?
Perez seconds.
All right, any further discussion on this item? None? Okay, we'll now vote. Please only respond if you'd like to abstain or oppose. This item is approved. With no more items on the agenda, I move to adjourn this meeting. Do I have a second?
Second, Kim.
Excellent. All right. We are adjourned. Thank you all so much for joining us today.
Thanks,
Take
everyone.
care.